Hope everyone is doing well today. I just wanted to go over the pre-market plan from last night as well as the possible trades that could have been taken based off of this pre-market plan. So they were all on ES I focused on. Of course, NQ is in the background helping with this analysis, but I'm just really trying to focus up on ES and NQ. So using the both to help aid with these plans. All right, but I'm just going to get right into it. So the bull case, if I wanted to look to get long, is as follows. So I really was interested in this 41.18 area. And what I wanted to see happen was I would have really liked to see something like this, maybe come back up, and then maybe another double bounce or double bottom here. And then we kind of show strength like that, like a little W pattern. The next kind of variation of that is coming down. We show, some strength and volume here, and we come up, maybe pull back a little, and then I would get long here as we, continue showing strength, targeting this supply zone up here. Now, let's say, I woke up this morning and I see price kind of, slowly making its way up like that. And the next thing I would have looked for is to see how we reacted in this supply zone. This is all the bull case scenario. It really needed to stay above this 41.18 area, around that area. I really like that to hold. And I wanted to see how we reacted in the supply. So if we came up like that, and then maybe kind of came down, whoops, if I see if I can see this. Okay, so if we came down and can't really, sellers aren't really doing much, and then we come back up here, I would look to get long up here. Try maybe a little bit, little size. Again, we are in supply, so it's something to be cautious about. But if we have, significant volume, where the volume, kind of looks like this, not that heavy, but you guys get the idea. I would look to take it long, target this 45-minute supply, and then eventually this key area up there, but that's, ways off. So those were kind of the two bull case scenarios I was looking for. In addition to that, I was, wanted to get into VIX, look at VIX for further support, which I'll get to in just a moment. So that was the ideal bull case scenario. The bear case scenario, which, obviously I feel like is a little bit more likely simply because we are very weak in this market. However, I do want to remain, objective and not really with a bias. So as we can see, the bear case scenario is if we rallied into this 45-minute supply. This is the first one. So let's say we rallied up into this 45-minute supply, and then we kind of had a strong reaction from sellers, and then we kind of came down like this, maybe a little lower high up here, and then we come down again. And that's, we get short here targeting this 41.18 area. Or, maybe we come up like this, and again, volume to confirm it, where, we show an increase in volume and we just immediately come down like that, which is also possible. And you want to get in somewhere around that green dot area, maybe even a little sooner, depending, it's all really dependent. And of course, your stop is going to be above, the high of day maybe, or, pre-market resistance, or above this supply zone. It really depends on your risk to reward strategy. So that was one case. The next one is if we fail to stay above this area of interest at 41.18. Again, I mentioned this 41.18 level because it was a important support and resistance area in the past, just, that general area. I think that, if we woke up this morning and we saw price come down, and we're kind of, holding out in this area, I would have looked to take it short below this 41.18 area if there are no buyers stepping in. Again, I really wanted to see buyers step in there. But if we had no buyers step in, I would want to see this area turn into resistance. And then I would either look for a retest, or if we have a strong push, if we have a thick-bodied candle that kind of looks like this one, let's say. If I just get my arrow thing out, oh wow, I am getting used to this. I apologize here. Okay, if I get my, let's try this, take two. How can I grab it? Okay, so if we have, a candle that kind of looks like that, this thick body below it, maybe I enter, maybe I, go in the smaller time frame and look for a retest. And of course the stop loss would be above this area, or even, maybe this area even, targeting below. The only cautious thing is that we do have these key demand zones here, but again, if sellers are present and we're having thick volume or heavy volume, I have no problem seeing these zones get wiped out, and we eventually go further down to this zone down here. But that's ways off as well. So obviously would have been targeting, maybe I like this, take some off at 4107 and then 4092 area as well. So let's just get rid of these lines. So that was the bear case scenario that I had, and then also VIX, which I want to get into just a second. So I'm going to get rid of that, and then I'll get into the plans and stuff. All right, so VIX, if I bring back, let's see, here we go. So I said for me, VIX is above, ooh, little typo, apologies. If VIX is above 34.5, 35, it's dangerous for bulls. So again, it's a little bit, and that, you can see we had some intraday resistance here. So, the bulls were defending here, or rather, the bears own VIX. And then we eventually kind of broke through, which I'll get to in just a minute. And then we kind of came below this 35 area, again, 35 area and 34.5 area. And look at that, we sold off the rest of the day. And let's see what happened. All right, so let's get into these plans. But first, I think I'll pull up one of these. Actually, I'll just go full screen for here, and then I'll show you what VIX was doing as well in coordination with these trades, or possible plans rather. Okay, so we opened up at 9:30, of course, as always, every single day, and we kind of sold off. Wow, that is really bad. Yeah, Thinkorswim is quite interesting. So I apologize for this weird looking thing, but hopefully you guys can look past it. All right, so we kind of sold off, and we were below this 41.18 area. Now, I could have easily taken this short. I don't like trading the first candle of the day just because it's against my trading rules that I have. The proper stop would have been above 41.36, which is just ridiculous for me. If we needed to target 40.92 to kind of make any kind of sense. If we took this, we would have gotten down to maybe one target of 41.07. That's 10 points, so it's it's a 1 to 2 risk reward, which is not what I want to see. So instead, below this, you could have, if you took below this kind of pre-market low area, this support, it's possible you could have taken it below here with a stop above this 41.11 resistance area. So you could have taken it for a couple points, maybe a quick little scalp. It's possible to target 4100, 4107 maybe. So you could have gotten a decent little scalp here at this area. Something that, not really what I probably would have done, again, because I like to see the market develop. And then if you see immediately, we kind of reclaimed this 41.18 area. We bounced off of this key demand zone. So again, a little risky to take this short. So I probably wouldn't have taken it short simply because we had this 3-hour key demand zone. So I would have liked to see this kind of get sold into. So, we pop out of here and then we come back down. We do see that we're coming back. We did come back down here, right? So I'm trying to put you in the mind of, what it's like live, right? So we come out, we pop, it's a bearish kind of candle close, but we come back down. And if you see, you start to come back down. Let's say we're in this trade, right? At 940, at 4110, we see us coming down again. Our stop would be above 4111, and maybe our target's 4100. That's a really good scalp trade right there. Not huge, but it is one scalp possibility. Not something I recommend since we are in this key demand area, as immediately we did, in hindsight, reclaim this area. And then you can see we kind of consolidated a bit. It's possible that after that reaction, I would have gotten long, maybe above, let's see. It's possible I would have gotten long above here, but, a little bit of a fake out on this candle. So, high of day is something that's extremely risky. So maybe I would have gotten long around, let's say 950. That's probably a better example. with a stop below here. So probably would have gotten stopped out, but then again, we reclaim this area. So, maybe I get back in here, right? It's all about risk management. So if I'm risking, 41, 33, so about 20 points. But if I get in down here, I see the bounce, that's about 10 points, and I'm targeting either pre-market high, which is a very solid trade. So I'm sorry if I was a little bit confusing. I'll just re-say that real quick. All right, so let's say the first trade was at 950. I'm above 41.18. I'm bouncing from this area, stop below, maybe the 41.10. That probably makes the most sense. So about a 10-point risk here. Risking about 3 to 1. So it's about a 3 to 1 trade, which is not bad at all, actually. Relatively good trade. So, and let's see what VIX was doing at that time. If I go over to my flexible grid, and we see at 950? 950. Let's see what VIX was doing. So at 950, we're still kind of above the 34.5, 35 area. And if we go back to what I said about it, let's see. For me, a VIX above 34.5, 35 is dangerous for bulls. When I'm taking my long trade. So maybe, maybe I can't do that, right? Maybe I say to myself, all right, if we're still consolidating, I need VIX, I need some kind of conviction, right? So I need to see us come out of this. This area, I would like us to come, down if I want to take a long position, which we started doing around 940. We came back up, and now we're above this 34.5. So it's very hard for me to get long. So that's one way I avoid this trade, is that VIX is above my key area in VIX at 34.5 and 35. So that's telling me, boom, can't do that. Really would like to see VIX come below this area. So that's one way I could have avoided that trade if I stuck to that that rule of it's still in my area of 34.5 to 35. Need to see that kind of move one way or another. But then we kind of came down, right? Now look at this, right? VIX was coming down aggressively, and we come out of this 34.5 area, and now I can get long. Now I can get long as soon as we're out of this 34.5 area. You could say on this that we were coming down a bit aggressively, but again, this is poor risk to reward up here. I missed the boat, and luckily we came down and we retested. So now we're getting a second chance. We're testing this 35 area, we rejected. We actually put a rally-based drop in on VIX, so that's very key as we put a kind of a drop-based rally on ES. So this is one extremely nice trade. Obviously, all in hindsight, right? Now that we're seeing it. So that's a good spot to get long with a stop below, 4110, or if you have a bigger risk tolerance below 4100. And now we're coming down below, and if we waited all the way to get below this 34.5 area again, might be a little bit too late, and our risk reward is a little bit skewed. Maybe you put your risk up here. A little bit tricky, but I just want to move this video further along to go, just to kind of move things along. All right, so that's how I use VIX to determine, quality of trades. Now let's see what happened the rest of the day. We saw us coming down, kind of consolidating in this area. If I just put, if I do another oval, we are just consolidating in this area, and then finally we break below. We finally break below this, the low of day, which is a little bit kind of interesting. So again, we did spike up in volume here. You can kind of see that we had abnormal volume around 1 o'clock. So it's possible you could have gotten low or short below 4104, because let's see where VIX is now. Remember that 34.5 key area and 35? Well, there you have it. We got back above it. We got back above this 34.5 area right as we would have entered the trade. And that's, telling me that, okay, now we're kind of looking bearish again. And what happens? Well, we drop about 10 points. We kind of sell, pop back up, but rallies are getting sold into. Again, my stop loss probably would have been right here or something, so it's possible maybe I have a poor trigger finger and stop out. I'd like to say I don't. As you can see, this 4107 is probably more proper. And then we continued to sell off. And that's just, another way of combining VIX and ES. Now, again, I don't really like to go flippy floppy, on the trades, but look what happens. We come back below 34.5, right? We come back below this 34.5 at 310. So let's say you want to come back. A little bit hard to trade this, but volume kicks in again, right? This was power hour, volume kicks in again. And we break above, below this 34.5 area, 35 even. So you could have gotten in way above, way in front of the train if you want to do it. If you want to see us, you could get long at 305. We are very weak, but we did break a trend line. We're kind of creating demand down here. So it's possible, a very difficult trade, a little bit riskier as we are very weak, but you can see that we are increasing in volume here. And you can target, whatever your risk to reward target is. There's several things going for this trade. We're breaking back below our key areas of 35 to 34.5. And then we just rally the rest of the day and finish strong. So that is one way that I use, or, a couple ways that I would have traded today. Or would have wanted to see people trade today, or based on your own style. But that's how I combine VIX and ES together to make quality trades. Again, I will continue to refine my strategy. I would like to, I'm still trying to figure out how to, not enter some trades and enter other trades. So all very happy sort of progress to see in my own trading, and hopefully this video has helped you guys. So thank you so much for watching.